Retail investors, including university students, barbers or taxi drivers, have all been piling cash into stocks, betting that the Chinese mainland market has resumed its upward momentum after a month-long consolidation. The main index hit a fresh 7-year closing high in recent days, on signs that Beijing will roll out further and more aggressive stimulus measures. The Shanghai Composite Index jumped 3.4% on Monday to its highest close since January 2008. At the Morgan Stanley China Summit this Wednesday, strategists say the key performance driver for long-term investors still remains growth in earnings and dividends.
Well, if you look at the offshore universe, which is what we specialise in, which is China 8 shares and the MSCI China universe, there we've had a valuation re-rating, and now, having been very cheap, they're trading back in line with long-run average valuations. But the earnings outlook for MSCI China is relatively subdued at the moment, so it's important that policy easing continues and that actually helps the economy turn around. And for the onshore markets in Shanghai and Shenzhen, they have re-rated in valuations to a much greater extent and are now somewhat expensive to their long-run average levels.
The MSCI China Index, which covers China-based companies listed in Hong Kong and the United States, has recorded a compound annual growth rate of 13% in earnings per share over the past 10 years, expressed in dollar terms. The Shanghai-Hong Kong Stock Connect is likely to add to the momentum.
The follow-up, of course, will be Shenzhen-Hong Kong Stock Connect. I mean, if you think about this, if you put Hong Kong, Shanghai, and Shenzhen together, this is actually bigger than the NASDAQ and slightly smaller than New York Stock Exchange. And this is going to, I would say, improve corporate governance of the market, would bring institutional participation into the market.
And more good news. FTSE Russell, one of the world's largest index providers, said this May it will launch 2 transitional indices that include China A shares. In the spotlight for equity investors are also comments made by US Federal Reserve Chair Janet Yellen earlier this week that the central bank will raise interest rates again later this year. Martina Vogt, CCTV News, Beijing.